The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the 31st of October, the very last day of the month. This is the day that the candle will show up. And tomorrow you'll have either a higher high or a lower high in the monthly, and that sets off a chain of events that says, let's watch whatever the high was. Let's say it was yesterday in certain monthly charts, because if in all of November they aren't taken out, you get a peak, and that peak may be a peak of consequence, so we don't know. But that makes the close today on the monthlies very important. On the weeklies, we have to go tomorrow until 4 o'clock. Now, thank you, Steve, for 2 great hours. And, of course, straight after my show, you've got Larry Pesavento, who's back. And then we've got Daryl Martin, Dave White. You got Andy Hecht. And I'm sorry I was unable to be at that workshop last night. I will try to get it in an archive, because I know Andy does fantastic work. And it's really worth checking it out. Tremendous amount of technical know-how and a tremendous insight and knowledge. Now, what we try to offer here at TFN is education. Education that I don't believe you get in many places. You can go almost anywhere on the web, unless it's a specific site for a specific purpose. Just to have free information like this is just unheard of. You know, Tom's put together an incredible team here, and I've always been proud to be part of it, being here. Let's see, March, I think it'll be 2003. That's already 10 years. It'll be 11 years in March. So actually, I was here before that, but my news service started at that point. That's my newsletter. Now, this is going to be very interesting as far as I'm concerned. I want to show something. I thought about this a great deal, and I've decided to do it. There's only one way, because I have this, what I consider to be one of my most important Master Trader series coming up in a week's time, a week from tomorrow. Now, I talk about this because I have often over the years tried to plan when to have these in relation to cycles and dates on my work that seem to be really important, either coming or going. That is, coming into a potential top or having just left the potential bottom or top. And sometimes it occurs almost within the same day or week. And I'm considering that next week is going to be a really important week, and I'm going to show you in the QQQ series why. I'm going to show you in the S&P and the SPY in a moment why. But I'm going to do something that I don't always regret, but occasionally I regret. I regret it when it's hubris. When you're using something to show off how wonderful and great something is, you just get smacked in the nose. Those trading gods, lowercase t, lowercase g, are just waiting out there. And what is hubris? What are the trading gods? That's that little elf sitting on your shoulder, wagging the finger, saying, "Don't short, don't buy, don't." And then you go ahead and you do it because your fingers are itchy and your gut says, I got to do something. And your mind is saying, whoa, would you ever be doing this if you were thinking rationally? So in this case, I am thinking rationally. I'm going to do this. It's going to be, I'm going to show you our trades for my subscribers. I'm going to do it for a couple of reasons. Oh, well, most of them. Because I believe quite strongly that those are not positions right at this particular moment I want to add to, I want to get out of. I like them as they are, and they are beautiful pieces of work to show the methodology of the Chapman wave. There's no other way I can do it. I need, what have you done for me lately, number one? And the other is, okay, well, you're putting your mouth where your words are. And the answer is yes. So I'm going to be doing that. And first of all, what I want to do is just run the numbers. And the numbers go like this. The Dow's down 53 at 50,565. The S&P's down 3.5 at 1760. The comp index is down for 39.26. Excuse me. You've got gold down 24, 13.25, peak D. Remember the GLD? Boy, I'm just going to hammer those peak Ds over and over today so you understand one of the key precepts of my methodology. The silver is down 97 cents at 22. Platinum is down 19 at 14.54. High-grade copper stuck in that range, down at 3.30. Crude oil is at 96. You've got bonds down a half a point. The dollar's up 34 cents. Nice move in the dollar lately. And the euro's made a peak D top with the GLD. I've been talking about that. I show my subscribers. I talk about it, and it's pulled back. And I'm going to prepare everything that I need. I actually have it all ready. I want to take our first caller, a very important caller. We haven't had him calling for quite a while. Peter from Park City, Utah. Hi, Peter. How are you?
Good, Basil. How are you doing?
Very well, thank you.
Great. It's glad to hear it. I was wondering if you could go ahead and kind of go over the chart I sent you on the British pound, and then also, I guess, look at the euro here and see if we probably could actually have a significant top in. Okay,
so EUR, I get it by a GPP. Now, what I'm looking at you now, wait a minute. This is the euro, Great British Pound. I did
no, I wanted to look at them just against the U.S. dollar. I'm sorry.
Okay, so if I take let me just start off with the U.S. dollar, and I'm going to show you something very interesting. I've got that chart. I just can't remember what I titled it. So the U.S. dollar right now, folks, has gone from 79, round number low, in the continuous contract. The actual contract itself was a few pennies off the 79 round number low, but the continuous contract had this beautiful candle at the bottom, doji candle, strong leg A, and the weekly chart is the one I want to look at. Just first of all, the weekly chart has had a beautiful symmetry in place. Let me just show this chart here. One of the techniques that I talk about in my Chapman wave methodology is the concept of symmetry. How if you identify the correct candles, you can get a left side, right side projection with a Chapman wave inside wedge, and that's going to be this. I usually color it pink, and I usually make it a dashed line. And this is the weekly chart. And that showed that the 84.10 high of July the 27th back in 2013, which pulled back to 78.60, made a kind of a W pattern. But within that, there was a curve, a cup situation that said if there was a left side, right side price time match, it should take you to the candle to the week of the 17th of May, and it should test the 84.10. Well, it went right there, and it went to 84.50 in leg E, then peak E, pull back, has what I call a rogue wave spike to the upside. What's a rogue wave? It says that you are in a sell mode. The technicals are all confirming that if you were short, you were correct. But suddenly there's a little bit of strength in one of the indicators, and that indicator is usually the slow stochastic. And what does it do? It goes above the previous high. It takes out all the shorts because it holds it just long enough to take out the shorts. It introduces a whole bunch of new people into the long side saying, oh, I missed that whole move. I'm going long. And the very bar that does that closes at the low and continues all the way down. And then it overtakes to the downside the previous level where it started the up move. In this case, it would be the 80.50 double bottom back on the 21st and the 14th of June, takes it out and goes lower. And now it's gone to a trough E. If tomorrow, Friday, closes without taking out the 79 round number low, the chances of it taking out the 79 low being at 80.16 right now is, I wouldn't say slim to none. I just say it would be a really unusual situation. But what's more important, I didn't finish this. I had it on another chart. I wanted to do a left side, right side price time to the right side to say that the 78.60 low back on the week of the 21st of September, it has not been broken, and you've gotten to trough E. When you get to trough E, you've taken so much time and so many points, and yet you still can't do what was done in one move back on the 27th of week of the 27th of July, when it went from 84.10 straight down in just two legs down to 78.60. This says it's worked very hard. It's accomplished a lot on the downside to work off a very oversold condition. The stochastic's flattening out. It's at 10%. That's not great, but it says it's trying to turn up. The MACD is finally flattened out. I would say that the dollar has that 80.34 round number, 84.34 9-period exponential moving average to close above, and it would need to close above it 2 out of 3 weeks for me to say I've now got a trend change, and they need to be higher highs, and then you've got a trend change. So this is just a starter position in the intermediate to weekly, but the monthly is the one that I've been very concerned about. Why? Because there is an up channel, an up track, the Chapman wave inside up track, those two parallel lines. They make a little channel, but it's not really the big channel that we usually look at. It's the support level where the price usually bounces up from, a propellant zone. If it's at the top, it's a repellent zone. So now let's look at this. And the monthly is saying if by tomorrow the dollar closes underneath 81.24, which is the 9-period moving average, and it also happens to be the support of the lowest trend line, it says this has to, first of all, be considered in a monthly chart as a bounce, and no more than a bounce until major changes happen, and it has to occur in the weekly chart. And now we can go to the daily chart, because the daily chart right now is the rudder that's trying to change the direction. And the daily chart has a resistance level. It has two, actually. I'm just going to draw them in. There you go. We're at a very wide inside track repellent line, and if the dollar by Friday is able to close into that 80.30 level, that'll say, great. Now you've managed to establish that you have had follow through. I'm always afraid of a single leg A up. I want to see a pullback, and I want to see leg B start and have very good force to the upside. So far what I'm looking at is that the dollar is showing nice bounce, a nice bounce in the daily. It hasn't broken any trend, any resistance levels. These are diagonal trend line resistance levels. And until the dollar really closes above 80.7675, that was the high of the 16th of October, until it closes, and I'm going to use the word decisively above it, I have to just treat this right now as a really nice bounce. It's just a potential start of something. And I'm just going to, do you mind if I go to the EUR-USD, the dollar currency pair?
No, exactly. I would ask that. And then go to the British pound, US dollar.
Yeah. Okay, so what we're looking at, folks, is the EUR-USD euro-dollar currency pair. Now, within this context, you're looking at, this is always a mix of currencies with a predominance here for the euro. Now, what we're looking at, there was a PD doji right at a trend line resistance, and it's just about to break support of a trend line resistance. We'll be back with Peter in Park City and Garo in Newport Beach straight after this break, and then a little later on, I'm going to show you some things that are very important.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back. Basil Chapman, Dow's down 30. S&P's $1.25. We'll talk about that very soon. But right now, we are on with Peter in Park City, and we are looking at the currencies, the currency pairs, actually. Now, what I have is a peak D top in the euro at 1.38315. I think I hope that's it. Yes, that was made on the 25th of October. What's happening, there are two trend lines. The one is being broken as we speak. There is another one that is the, I'm just double checking here. No, not that. Let me just check right there. Come back. Okay, I just want to check on that. Moving average, yeah, it's a 32-period exponential moving average, which I have there as background. I'm still experimenting with that. And it's holding right there. But this first trend line on the euro at, well, if it's today, it's 1.3566. That's going to be really important, number one. Number two, if that gets taken out, then what we're looking at is a left side low bar back at the 1.35756 area, mid-October. And if that's taken out, it confirms, first of all, I don't want to talk about today's action as if after 2 hours that's the close of the day. It's not the close of the day. Anything can happen. We know that. But what I will say is that if the Euro-USD currency pair closes at about this level, I've already put the down arrow in, I will have not just a confirmation of a sell signal in the daily, I'll have the start of putting your foot, one foot on the accelerator, one foot on the brake, and now it's off the accelerator and it's getting close to putting on the brake, which says I will get a sell mode in the euro-US dollar daily. It must already be in the, it's already a sell mode in the 120-minute chart, because that's a much shorter term. But if it does that, or especially if it takes out 1.356, that's a sell signal to a sell mode. The pattern that I would expect says that then you should expect some kind of support at the 1.347 area. A bounce, you might even make a right shoulder pattern that makes a head and shoulder pattern. Well, not one of my favorites, not because it isn't a pattern that works. It's just that by the time it works, if you haven't used other techniques, it's already kind of late, because what you're expecting is it's going to break the bottom and then it's going to double that distance to the downside. That is the daily. But what's really important about this is that the weekly has got a beautiful left to right side, right side, and a diagonal trend line target, and it's gone to it. I've spent a lot of time on this. I don't want to spend any more time on it now, other than to say I have various wave counts. There's a chance that it could really have started a brand new A, B, C, D, E, and that's where it is right now. I'm not really interested in that. Sorry, in the Euro weekly. Most importantly is it's gone from the left side high of back on the 1st of February at 1.37 all the way down, and it's made the H pattern that very often can turn into a very positive cup pattern. It's fulfilled almost all the requirements, but the MACD and stochastic are still very strong, and I don't want to fight that, because the stochastic's at 90% and the MACD is still very, very strong. So I'm saying that.
Okay, on the weekly, Basil, could
yes,
there be an alternate count where that would be a C minus, go back into a restart, and have us be at leg E right now?
That was my point. That is exactly what I used to say on my CD introducing the Chapman wave methodology as if you don't break the low bar on the left side, but you pull back almost to it, I used to say I want to restart the wave count. Over the years, I've modified that to say keep a parallel wave count, because my experience has been that if it doesn't break it, the impetus for the move up is so strong that the next leg up could if it's a new high above that C minus, we would call it, could reactivate the C and call it a new leg D, which is what I kind of did here. But in this particular instance, it is so close, and you're talking about a currency that one of the euro, people don't realize the euro and bonds are really the biggest trades in volume in the entire stock market, right? And the dollar especially. But when you're looking at 1.274, the low of the week of the 5th of April, 1.274, I hate all these numbers. And you go to 1.275 half a year later, and 3 months later, and you've been all the way up. That to me says, you could treat that as a recount, and it goes A, B, C, D, and correct. We would be at E right now. So let me sum it up by saying I like the euro still on a short-term basis. It's pulling back. It's trying to test the diagonal. Actually, no, I need a little more time. Do you mind holding on?
No, not at all.
Okay, we're going to hold on with Peter. We've got Garrow waiting, and we've got Bob waiting. I'll get to everything. I'm going to just sum it up for Peter in a few words when we get back. Hold on. Basil Chapman, Dow's down 25.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and let's see. We were in the process of looking with Peter. Peter, this is what I wanted to say. In the EUR, UST, regardless of the wave count, and this is for me very important, when you get to a particular level that says you're getting a little bit toppy and you've punched through the previous high, most important high bar. I said high bar back in, what was the date? In the weekly chart. It's back in the week of the 1st of Feb. It says, yes, you can come back, but keep looking at the technicals, because if the 9-period moving average at 1.354 is support, then that should hold over the next 3, 4, 5 days. If it's not, you're going to go under it. But then the MACD fast moving average is still very strong, and the stochastics at 90%. So I don't have a signal. That signal has to come from the daily, and the daily says just on a shorter term basis, we're at a peak D-top. We're giving back a bunch of bars from the previous weeks, but is still way above the very ugly candle of the 17th of a very beautiful candle of the 17th of October. That's the candle support that's going to be very important. So that's the way I'm looking at it. But as I'm looking towards the monthly, I believe that the euro will break at some point the resistance of that downtrend line in the euro. And just real quickly, because we've got people waiting, if you look at the GBP GBP-USD, I think that's the way, yes. If you look at the British pound, it made the PT just above the 200-period moving average in the weekly chart. That's going to be a testing level, and it seems to me you're going to bounce around in the British pound US dollar currency pair. You're going to bounce around a little longer between 1.6, maybe 6.3, and good support at 1.580. That's really what I'm looking at, and the daily has made a cup formation that says there's a good chance, and this kind of would confirm because of the time taken to pull back. It could make another cup because we've seen this kind of pattern so many times lately. Patterns repeat. They're like fractals of human emotion and all the different stock movements that we see. And this is what I'm looking at. There should be some support and maybe make a cup formation in the daily chart as long as 1.589.3 holds. I hope that helps you.
It does. No, I greatly appreciate it, Basil. As always, it's a pleasure to talk to you.
Thank you very much for calling. Great to hear from you again, Peter. Thanks for calling. We're going to go on to Garrow in Newport Beach. Hi, Garrow. How are you doing?
Thank you very much. How about you, Basil?
I'm well, thank you. And I'm thrilled that the Red Sox won. What fantastic playing. It just, the determination and the way they came, the professionalism was just fabulous. So now I've got that out the way. You wanted to look at
Visa.
Okay.
Visa. I want to know that what's your idea that how far it can go down? It may go down to on the daily chart to a 50-day, or this is the bottom and it's going to curl up from here.
Visa came out, and I think that the earnings were a disappointment. It coincided, as you know, we were talking about this in the Chapman methodology. What do we look for? We look for a buy signal to go to at least a peak D. It went D, and then it went up to E. That's where I said to you, be a little careful. It could pull back to the 198, maybe 197 level. It actually went down to 194.26 this morning. Now it's making a doji candle. I would not touch Visa right now. I think it needs a little time. And my thinking is if it had to bounce towards 200.50, I wouldn't be surprised if it's a good short as a trade, not a position play, because the monthly chart is still very strong. You've still got the season, the holiday season coming up. So just as a trade. Now, what I'm going to suggest to you is keep your fingers off the trigger button. Don't even think of buying it yet. Even if you miss an opportunity for a 3 or 4 point move up, the risk is not to fill the gap. The risk is to try to come back and test, I believe that's the 50 period, to test the 50 period exponential moving average, which is at 191. So don't do anything. And not only that, I think it needs time, because if it closes on any weekly basis, say next week, underneath 194, which is the 9-period moving average in the weekly chart, I'd say to you, hold on. It should make leg D, and it says it could still pull back without breaking this pattern at all. It could, in fact, pull back into the candle of the 11th of October, which had a high of 192.20, but a low all the way down to 180.11. I suspect this is going to be one of those cases where Visa pulls back, takes a little bit of time with a chunk of the move from 205 to 194. That's 20 points. No, that's 10 points, right?
10 points, yes.
10 points. 10 points. I think more like 12 to 15 points down, and then it's paid the penalty for giving bad news, and I suspect that it becomes very interesting again. Have patience. I would not, even if you were able to get a couple of points to the upside, there is a chance that it could gap down any one of the next few days, because this is not good news as I can see it, but the weekly is still strong and the monthly is still strong. I'd be looking to buy it as an intermediate term buy, not for your 3 or 4 points, if it does certain things and holds very well in the 191, maybe 189 area, but I need to see how it gets there.
Yes, yes, absolutely. I bought it at 195 today. While you were talking, I sold it here at 197.12. So I'm going to hold to that and see what's going to happen at what was that 180. That's what you said.
That's right. Yeah, with 200 being the reversal point if it did bounce further. I'm thrilled that you were able to do that. When I looked at it, when I saw your name, I already looked at Visa this morning. I said to myself, I wonder, because we spoke about this, I wonder if you grabbed it as a long position, but it could still go. I'm going to talk about the market in a short while. It'll fit into your Visa having a little bit more of a bounce. I'm just a little afraid that the sellers were so surprised that they might want to have a bounce to reshort, and then I think those institutional buyers will come back. Hey, nice trade, Garrow. Congratulations.
Thank you.
And we'll be looking at it again in about a week. Thank you.
Yes, sir. Yes, sir. Thank you. Thank you.
Have a great weekend. I'm going to go to Bob in Rumson, New Jersey. Hey, Bob, how are you doing?
I'm great. How are you, Basil?
Very well, thank you.
I'm looking at IWM as a potential short. I took a small position yesterday. I have it in making a peak F/D, and on a weekly chart, I have it getting up near an upper trend line that I drew. I want to know what your feelings were about it.
Okay, now I have a little slightly different notation. Did I miss something here? No, you can't take the low bar of the 3rd of September. Did you count that as a peak?
No.
So then I'm not sure where you got. I got A, I got B. Wait a minute. Did I get B? 106.08. Oh, I used a parallel wave count. So this is DEF. I'm with you. Good. I remember that. I should have. Yeah, I forgot all about it. It was written in gray. I just forgot about it. This is one of those things. That's one of the reasons why to computerize this wouldn't be good, because you would miss all these great subtleties. All right, here we go. That is the B. I meant to change it back again. That was silly. So that's D, E. Wait a minute. I get a G. Now we're both in trouble. A, B, C, D. I get D on the 14th of October at 108.35. That'll make E. And then, wait, no, you're right. E, 111.49, 111.45. We're both together. We've got an E. Okay. We should be able to, any methodology, you should be able to have everybody agreeing on the labeling, even if it's an alternate count, and that's exactly what you and I got right now. So that's different. Okay, now I can get all the notes that I've put in here are going to be, it applies, but it doesn't apply to the right letters. So let me get rid of that. So folks, we're looking at IWM. It's the Russell 2000. It's the ETF. And what I'm looking at here, it's the iShares, is that, there we go. If this is a peak F, the bar of yesterday, peak F in the Chapman wave at 111.62, then the bar that we've just seen is exactly right with a strong down move. The bar that we're looking at today is the kind of doji, unsettling. Nobody's quite sure. Is it going to follow through? Is it not? So the close today is important. So your short, I first of all was going to say congratulations on taking your short yesterday. Why? Because you know that if it goes, well, I don't know what your stop would be, but my stop would be 1 penny above 111.62. I'd probably make it even tighter than that, but 1 penny above 11.62. And you got to say to yourself,
that was my thinking as well.
Okay, because it could recycle up. Now, I want to talk about this in the context of two things. One is you have to be a little bit careful here, and that's exactly what I want to talk about in my part of my newsletter. The QQQ series. That, to me, is the clue. The clue is the QQQ. Why? Because under every condition, I try to count it every which way. It is a peak C. It was a G/B before. And then at 83.49, it made on the 30th, yesterday, it made leg C. I got no other way to count that. I'm waving my hands here. So there should still be a leg D above 83.49. The Chapman wave doesn't say how high it's going to go. It just says the concept of higher peaks and lower troughs says that on the way up, you should get to at least a peak D, and that's where other things could happen. So that says it could lift the IWM a little bit higher, and if you look at the DIA has held the 9-period exponential moving average, but it's a little bit like the IWM in that it's pulled back and it's done all that you would expect at a peak D, but then you got to dig deeper, and this is what I'm going to be teaching in my course Friday a week in that all-day webinar. How do you use the MACD and the stochastic? Here you are, you get your D, you got a perfect, absolutely perfect left side, right side. You drew the plumb line exactly to the low, the doji low of October the 9th. Everything's perfect, and yet the one ingredient that call it 2 ingredients right now, but normally it would be just, I only need 1 ingredient that says, if you are going to short, which we've shorted within 10 points or so of the all-time high yesterday in the Dow, what are you going to do for stops, etc.? Now it's handling the position. Ironically enough, the positions that we have only long positions in my newsletter. We did have a short yesterday. It was taken out. So we only have long positions. And those are telling me that if they hold well, the SPY, and I want to put this together because this is part of the answer, the SPY could be having an alternate wave count that says this could be F/B. But everything about it says to me, no, it's more like B/F to carry over the peak at 173.60 that was made back on the 19th of September. The pullback didn't take out the left side low of 163 on the SPY. Instead, this is a beautiful move for the MACD strong, stochastic strong. You almost had a little squash, the technique that I talk about in the MACD and stochastic. It's holding the 9-period moving average. There's one particular indicator that says you could go a little higher, but this is topping area, shorter term. So what I'm saying to you is, I would rather say to you, you've got the trade, have a little bit of patience, because if the Qs are going to make that leg D up in the daily, and if the SPY has still enough strength, the 500 stocks of the S&P, to go to 177.52, which I'm going to have to call leg C, and this is the irony of what I'm looking at right now, we could go into early next week before we actually get a top that coincides with the D in the S&P. And the reason why you see, the only reason why I'm hesitant is that as long as the Qs are showing strength, and Apple right now is up 1.45 at 526.35, there's that internal strength that really helps the NASDAQ. And I've got leg D in the SPY. IWM has, I think that was an alternate count that I'm using in the IWM, and I'm trying to have everything coincide. If I'm correct in my notation, and I believe everything else says it is correct, and that says that was peak D at 100.38 the week of the 24th of May. It pulls back, and then it goes to peak A at 105.63 the week of the 9th of August, pulls back. It goes to B at 9 on the 20th of September at 107.61, pulls back the next week, goes to a little inside candle with a little doji, goes to C at 107.93. That's only 93. It's only 32 cents higher, but it's C. Makes a lower high bar, subtle, but it's there, 107.93 to 107.73 the week of the 11th. And boop, we go up to this doji candle at leg D, and then 111.49. And this week we've gone a tad higher to 111.62. So that confirms for me, yep, it's a D. And everything all around, if you look at the Dow, if you look at, let's go to the diamonds. The diamonds have made a peak D at 157.06. They went to 156.87, just under it. Still has room to go to an E. I'm going to give it a little bit of room, even though, as I say, we are short. I've got a very tight stop. So I'm going to say to you, have patience. Let's look at this again together on Monday. Use your stop, and I don't think it'll be taken out by Monday. Let's look at it together, okay?
Thanks for your time. I love your whole concept, everything you do.
Thank you so much for calling. Thank you, Bob, and we'll speak again very soon. Bobby Rumson, and then we'll be back with Shiver in Boston. Basil Chapman, Dow's only down 17. S&P.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
With Shiva in Massachusetts. Hi, how are you?
Hi, Basil. How are you? You're in my neighborhood.
Yes. Oh, listen to the music.
Yep.
You'd like to look at?
ICE.
Okay, so we've got ICE is the symbol, Intercontinental Exchange Inc. I'm going to ask you, normally I would just go into the analysis, but I need to ask you, because I know that you're usually looking at the long side of things. What are you doing?
No, the reason, it's a follow-up my questions regarding the NYNEX merger between NYNEX and ICE taking over, and thinking the value between selling out NYNEX or take the ICE in exchange, and I'm still looking at what's the future for ICE.
You know, that's a fundamental question. I'm the wrong person to be talking about that. I can talk about the price chart very well, but to go into the fundies, the late Ed Young would have been fantastic. I'm sure Tom O'Brien would have a tremendous amount to discuss with you on this. I'm going to avoid it, but the question basically also would say, regardless of what's going on, what would I expect the price action to be? And I've got it in a very strong leg E Intercontinental Exchange in the monthly chart, having gone very quickly, one of the quickest peak B to C to D to E that I've seen. Well, it's not a peak E yet, but a leg E that I've seen in a long time. And very often that says it's gone there a little too quickly, even though we're talking about a monthly chart, and that there should be a pullback. That's not to say that there should be a sell signal, just a pullback, and that pullback is at 193. On the monthly says there should be very strong support at 173, so that's like a 10% correction. That's number one. Number two, I don't have anything yet in the monthly to say that there should be a pullback. So this leg E might even continue. But what I find fascinating, and I've got this in a couple of charts, there is no other way. I've tried all sorts of ways to count this. I suppose I could have worked out something. No, I don't want to make anything fuzzy. I've got this in peak C in the weekly. The technicals are pretty strong, 93% in the stochastic. MACD is good, but it is turning down a little bit. But what's very interesting to me is that there's an up channel support that says that a worst case basis sees a test around about 187 to 185. 180, it depends when. But there's a really good chance that as soon as this breather that it's taking right now from the peak E top at 198.53, as soon as that's complete, there should be a rally, and it might take time, but I'm anticipating that there will be a higher move above 198.53. So that's looking at more the weekly chart, talking 2 to 3, maybe 4 weeks, and then after that you might get a deeper correction. But I'm looking at it as if to say the weekly is still strong. This is a quick pullback in the daily. It's holding quite nicely. It could test a very important candle of the 9th of October between 191.20 and 187.35. But the major trend, the monthly and certainly the weekly, are still strong. So I hope that helps you in looking at it.
All right. Yeah, it does.
So next time, give me a call about the stock itself, but not about the fundamentals. Thank you so much for calling. I appreciate it. Have a great day. And go Red Sox. That was fantastic. So let's just do this, folks. I want to do this real quickly in the time that we have. We got Larry Pesavento coming up straight after this. I just wanted to show you, in my opening call, you click on, you put in your password, and you go there, and from about 6:30 in the morning, you'll see my charts keep coming. I show the Dow, I show the diamonds, I show the resistance, I show in this case the rectangle that's forming in the diamonds. Oh, I'll do a little bit more on this tomorrow, but most importantly, I want you to have a fabulous day. Stay tuned for Larry, and I will be back a little later on with Tom O'Brien this afternoon. Have a great day, and I'll see you tomorrow. Check out my opening call. Check out my workshop a week from tomorrow, all day with special bonuses.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.